How do you know if your online business is making enough money? I'm guessing you look at how much revenue you're bringing in, how many of your invoices are getting paid, and how much money is in your bank account at the end of the month. And that's a really great place to start. Tracking your finances will certainly help you to get an idea of how your business is performing. But there are even more business numbers you can track and evaluate in order to increase your business's revenue, including business numbers that you might never have thought of to use in that way. If you're new here, my name is Kari and I'm a business operations specialist. I help successful businesses with messy metrics clean them up so they can get simple, accurate information from their data, ensuring that they can grow quickly and more efficiently. To increase your revenue, you need a solid understanding of how much it costs to deliver your offer to your customers. You need to understand your expenses as well as your profit. Now, what your profit and expenses look like may depend a bit on the type of business that you run. You can imagine how different a business coach's profit and loss statement would be from a personal trainer's. Your expenses include everything that's involved in creating, managing, and delivering your product or service to your customers, and might include things like standard office equipment like computers, laptops, and furniture, digital products like website hosting, email services, internet service, and software subscriptions, contractor payments and employee payroll, training and business development courses, and everything used in manufacturing, storing, and shipping physical products. Once you know what really goes into serving your customer base, you can start to see how your profit stacks up against your expenses. From there, you might look for opportunities to decrease or cut expenses without sacrificing the quality of your product or services. One quick secret for decreasing your expenses: keep a list of all of the monthly and annual subscriptions and payments that you have committed to. You might be really surprised at the amount of expenses you can cut out each month or year by eliminating payments on software tools that you aren't using anymore. Next, let's discuss types of sales numbers that will help you brainstorm ways to boost your revenue. If you want to know how to increase your revenue, first you have to know how much you're currently making, and your sales data can tell you that. And the sales by offer numbers will tell you which of your offers is performing the best. With that information, you can start to reverse engineer your offer and figure out why it's doing so well, then start to apply that information to your other offers that need some adjustments. Similarly, you can look at your weakest offer and see how it can be improved. And while we just talked about the overall profitability of your business, a powerful metric that's often overlooked is the profitability of each of your individual offers. Have you ever heard of the 80-20 rule? In essence, it states that 80% of the effects come from 20% of the causes. In business, this often looks like 80% of your revenue coming from 20% of your offers. Now, you might have a front-end offer like a self-liquidating offer or SLO funnel, where the main purpose really is to drive new leads to your business. And in a case like that, you might be completely okay with the funnel only being self-sustaining and just breaking even, or even losing money on it because it's the cost of bringing new leads into your business. But as you work your way up your value ladder, you really want to ensure that the products that you offer are actually net positive when you take into account the expenses that go into producing them. And sometimes those expenses can be sneaky, especially when it comes to the amount of time it takes for you or your team to actually deliver the product or service. So don't forget to take into account things like how much time is spent answering customer service questions for that product, or creating content for, or supporting students in a Facebook group, or how long it takes you to prep for webinars, trainings, and lives. You might just find that one of your favorite products to offer actually isn't adding to your bottom line in the way that you think it is. And it may not actually be part of the 20% of your offers that are driving the majority of your revenue. This is one area where the numbers tell a really important story that we really need to listen to. When it comes to leads, quality is better than quantity. You could have tons of traffic hitting your site, but are those people likely to buy what you're actually selling? If you have a steady stream of leads, but your sales numbers aren't quite matching up, you really need to dig deeper. Simply looking at your number of leads isn't going to be enough. It's important to see if you're capturing qualified leads or if people are interested enough in what you're selling to actually take action on your website. One often overlooked missed opportunity in digital businesses is not nurturing leads consistently enough. Reflect on your current business processes. If someone has raised their hand that they're interested in the product or service that you offer, how often do you follow up with them? And how is that process actually done? Also, consider the source of your leads and determine what the conversion rate is from those different sources. This is one area where Google Analytics can be a wealth of information, as an optimized setup there allows you to not only see where your traffic came from, but if that traffic goes on to become a lead or a buyer. It's an incredibly powerful tool and allows you to hone in on driving more leads from the traffic sources that actually have the highest conversion rates. So what if you're getting a decent number of qualified leads to your sales page, but they're just not converting? You can pinpoint what part of your sales funnel needs improvement and start optimizing there. Funnel conversion rates are incredibly powerful, as even small tweaks can drive changes in your conversion rate at multiple stages and create a beautiful compounding effect. So let's say, for example, you're selling a course that's $1,000, and you note from your data that when 1,000 visitors come to your sales page, 100 move to your checkout page, and 10 of them buy. So that's a 10% conversion rate from your sales page to checkout, and then a 10% conversion rate from checkout to purchase, just for easy numbers. So overall, that's a 1% sales conversion rate, and you've brought in $10,000. Now let's say you increase your conversion rate by 2% at each of those sales funnel conversion points. So 1,000 visitors now brings 120 people to the checkout, and 14 and a half people purchase your course. So you've now brought in $14,000, which means your revenue just went up by $4,000. Isn't that powerful? The key takeaway on conversion rates is to look for the part of your funnel that's performing the worst and see what you can do to optimize there. Make the tweaks that are necessary, watch the numbers that come as a result, see the desired change, and then move on to the next lowest performing metric. Work on consistently improving your conversion rates, and you'll notice an increase in your revenue as well. It really is amazing what our numbers can tell us about our business, and a data-driven approach is the best way to manage and grow your business. And I'm not just saying that as a numbers nerd. I encourage you to look beyond your total sales or number of paid invoices, because there are so many sales numbers, marketing metrics, and sales funnel data points that will help you to really understand how much revenue you're bringing in and what you could be bringing in.